Good afternoon, everyone. Welcome to the Market Stabilisation Charge walkthrough. Today, we are going to take you through quite a full agenda. We're just going to give you an introduction to MSC and a range of information relating to the Market Stabilisation Charge. But before we go on and go through the agenda and start the walkthrough, I would like to just do some housekeeping with you. So today's session will be recorded. The purpose of the recording is so that any participants who are unable to attend today will be able to view the video and obtain the information at a later date. If I could ask you throughout the session to keep your microphones muted and your cameras off. And then throughout the session, we will have a range of presenters who will have their camera on throughout their presentation section. We do have question sections throughout the session. I would ask you if you would please save your questions for those sections. To do that, you can actually raise your questions throughout the section. So if you have throughout, for example, in the introduction, have a question relating to that slide, please do raise your question via Slido. Now on the screen right now, you will see a QR code. You will need to use your mobile phone for that QR code, and that will take you through to the Slido application. Once in that application, you can raise questions throughout the walkthrough. You can see the questions raised by other participants of this session, and you can like those questions as well. And then that will allow us to ask those questions in order of priority. If you don't have your mobile phone on you, please don't worry. If you're using the Teams app, you can use the Slido application on the toolbar at the top. Alternatively, if you're using a web browser, you can go to slido.com, and once into the Slido website, at the top you will see the participant code, and you put in #253029, and that will take you through to the question slide. Alternatively, as we go into the question section, you can raise your hand and ask your question verbally direct to Reco and the code manager. So the agenda that we have for today, as I said, it is quite a full agenda. We have an introduction to the market stabilisation charge. We're going to tell you where we are now. We're going to walk you through Reco's role for operation of the market stabilisation charge, the principles applied and the rationale, the walkthrough of the process, and covering data, so existing industry data sets. We're going to cover financials, so invoices and credit notes, payments and cash allocation, and what will be the disputes process. We're also going to talk about what the next steps are. So talking about the change proposal R35 and the plan for that change proposal, and how to respond to the impact assessment. And as I said, throughout the session, we are going to have a few sections for you to ask questions, and that we have Reco on the call as well as the code manager. Both will be on hand to ask those questions. If we don't get to answer all your questions throughout the session, please don't worry. We will use those to inform the FAQs, which will be available on the REC website and the REC portal post this session, along with the video. So now I'm going to hand over to my colleague Anne, who's going to take you through the introduction.
Right, lovely. Thanks, Fiona. So hello everyone, my name's Anne Perry. I'm the Change Delivery Manager, and I'm the change lead for the MSC change proposals. The purpose of today's session is really to walk you through that solution and the process that's been developed for the administration and the operation of the scheme. And it's really to give you the opportunity to ask the questions that you need to, and to make sure you're familiar with the background of the MSC, ready for replying and responding to the impact assessment that's currently open for change proposal R35. Before we kind of get into any of the process, though, I think it is probably worth a bit of a recap around the MSC. So from the 15th of December last year to the 17th of January, Ofgem consulted on a range of potential temporary measures that would enable domestic suppliers to better manage the risks that have been created through the current wholesale market volatility. And it was actually on the 16th of February that Ofgem actually issued its decision on those proposals. And that did include the modification of the licence to introduce the MSC. And that is requiring energy suppliers to pay the charge when acquiring new domestic consumers. And that's went live from the 14th of April. So I suppose to confirm the MSC, it's a volumetric charge. It's published weekly by Ofgem. It's split into two subcharges, so one for gas and one for electricity. And energy suppliers of domestic customers are subject to the charge when they gain customers. They will receive the payment, but when they lose the customers. So we are going to come on to more specifics as we walk through the solution and how that charge is then calculated, and obviously any payments due are calculated and invoiced, and that'll be covered in a few minutes. But I think it's just to be clear that obviously we recognise that the decision was made on the 16th of February, with the 14th of April being the go live date for the scheme. That's very short timelines for implementing, determining what the administration and governance process should be, and obviously getting that into the REC in time for the 14th of April. So it was actually determined that the right method of delivering the changes into the REC is through two change proposals. So the first one, which was R34, this was actually raised by Ofgem, and this was really just to introduce the MSC into the REC and to make sure and to introduce the obligations on RECO to establish the governance and operation for the scheme. And it wasn't necessarily to set out how the process would work, it was really to do that introduction into the REC. So that change proposal was approved on the 8th of April, and it went live on the 14th of April, and that was in line with the licence condition change effective date. So a second proposal, which is R35, that was then raised to, like I say, to introduce the necessary governance and the charging arrangements. And it's to set out the obligations on RECO for the administration and the governance, but also on each party suppliers around obviously the receipt of the invoices and then the payment of any applicable charges. So R35 is classed as an urgent change proposal, and it is going to require authority determination. If we're right to move on to the next slide. So a bit of a recap of where we are. So the MSC went live on the 14th of April. 20th of April was the end of the first MSC week. No charges have been triggered yet. And so we are in a position where the MSC charge could be triggered if the criteria are met, with obviously that reduction in wholesale prices. Obviously today we're at the 22nd of April, the stakeholder event, and we are in at the moment the impact assessment window for change proposal R35. That closes on the 29th of April. We felt it was really important to give suppliers particularly opportunity to walk through the process, ask the questions that are needed to help to support with the development of the impact assessment responses. So hopefully today what you'll understand is what the process looks like, how it will work, what the roles and responsibilities are, and obviously what will then be required from you as we go forward into the scheme. So once we've gone past the impact assessment period, we then go through the next real kind of critical engagement point then will be when the consultation window opens, which is on the 1st of June. And what again we're looking for during that consultation window is again another session that we'd look to get in place, and it is again the opportunity to ask any further questions. So if there is any solution refinement that happens after the impact assessment period, the consultation window will then be open for you to ask any further questions. What we're trying to do is make sure we're being very transparent around what the process will look like, how it will work, and obviously give you the chance to ask the questions that you need to be able to respond fully and provide the views that we need to be able to take this forward. So from an approval perspective for R35, we are looking for Ofgem, the authority, to make that determination on the 24th of June. And then looking for the new arrangements, so for change proposal R35 to actually go live on the 30th of June, when the administration systems will be in place, the legal text changes will be implemented, and that's the point from then that any invoice would then be produced. Hopefully that's given a kind of a quick introduction to MSC. We will come on after we've gone through the process on some more specific timeframes around the change proposal. But I don't know, Fiona, if we've had any questions.
We have not had any questions submitted so far. Does anybody have any questions that they would like to raise verbally now? Okay. In that case, let's move on. So now I'm going to hand over to Reco and going to hand over to John, who is going to walk us through Reco's role for operation of the market stabilisation charge.
Afternoon, everybody. So as Anne said, there's various bits of governance already in place with this insofar as the licence modifications that introduce the market stabilisation charge into the electricity and gas suppliers licence also determined that it would be administered under the Retail Energy Code. That was subsequently backed up with R34, which gave us the vires, if you like, to do that, which we pushed through urgently in order to establish that vires from the 14th of April onwards. R35 essentially fleshes out the rest of that scheme that obviously needed a lot more development than R34. So that's still going through the process as Anne set out. But parallel to all of that, we've been getting on with the other bits that we need to do to get in place. So rather than wait for R35 to be signed off, we've been carrying out the procurement not only of the data but of a service provider to develop the billing model and subsequently help us administer the scheme. So that's essentially RECO's role, if you like, to make sure that we are discharging the requirements not only of the REC but also enabling REC parties to discharge their licence obligations in respect of this scheme. In terms of the procurement of data, we're obviously using existing central service providers. This data can only be sourced from well-known places. In this case, we did have a question as to whether or not we could procure the data from the DCC from July onwards once the CSS goes live, but that would have required developing essentially two different solutions that we would have had to change after only a few months. And it would have came at a very difficult time, obviously, as DCC and the rest of the industry were ramping up for CSS go live. So we've chosen to source the data from existing sources. So in the case of gas, that obviously all comes from Exaserve. In the case of electricity, it's going to be a combination of CNC in terms of the EAC data. The switching data, and we'll be getting the EAC data from Electrolink. And combining those two sources of electricity to essentially create the equivalent of what we were getting from Exaserve in gas. Once we've got that data, that'll be passed through to the billing model service provider, which we haven't got a catchier name for at the minute, and they'll essentially match that switching data and energy volume data to the published MSC charge rate. That will be published by Ofgem on a weekly basis. And then from that combined data will be aggregated, sent through to RECO, who will then be able to generate and issue invoices in the usual way. So one of the things we'll be asking for from parties, which we'll touch upon later, is confirmation of who you would like to be the primary contact for those detail, for those invoices, etc., and bank account details, which Brian O'Shea will come on to later. I think that about covers it in terms of the administration of the invoicing of the MSC, but we're obviously conducting lots of stakeholder engagements such as this session. We'll be trying to make sure that everybody is aware, not just the parties who'll be receiving these invoices, but also people like the consumer groups, PCWs, etc., just to make sure that everybody's aware of the scheme and are factoring this into their future switching arrangements. So quite a lot of stakeholder activity as well. If we move on to the next slide, please. So in terms of the principles we've gone through, and I guess these are the ones which might trigger some questions as to why we have put together R34 in the way we have and the scheme in the way we have. Obviously, there's only certain sources, as I say, where we can get the necessary data from. So I think they're relatively self-explanatory, and I think the data sets we require are determined largely by the design of the scheme as put together by Ofgem. We have determined that we need to capture the data on a weekly basis in terms of the switches that happen in a given week, because obviously Ofgem will be changing the level of charge on a weekly basis, but that's not going to be on a kind of Monday through to Sunday type basis. The MSC week might differ. So because the scheme was introduced on the 14th of April, which if I remember right was Thursday, the first charge was published on Tuesday the 12th, which in this case was a nil charge, and that may continue to be the case for in the short term at least. But once that does change, then obviously those new charges will kick in from midnight on the Wednesday, unless there's a bank holiday. So we're having to collect the data on a daily basis, but we're referring to MSC weeks, and hopefully you'll see that those charges apply essentially for a 7-day period, though it could fluctuate to 6 or 8. Rather than invoice on a weekly basis, we're then going to aggregate those together and issue invoices on a 28-day rolling period. Again, because we're working to the timetable of the change to charges. Sorry, get a phone call. We're using that 28-day cycle rather than a normal kind of calendar month, if you like. Otherwise, if we were doing it on, say, 31 days, we'd be issuing something that applied for 4.5 MSC weeks and having to pick up the other half in the following week, and that would just add complexity to the whole model. So hopefully that all makes sense. The invoices themselves will be netted off, so we won't be expecting people to pay for 100,000 gains and then expect to receive something for 90,000 losses several weeks later. Obviously, it'd be much more efficient and ensure a more expedited flow of monies if we can net off those monies. We'll be doing that at the RECO level, so the invoices you receive will be netted off. We won't be allowing any netting off on a unilateral basis by suppliers, so you can't kind of withhold payment in anticipation of then having to get a credit the following period. So that's something we'll be doing. In terms of payments, you'll be aware that RECO works currently on a quarterly billing cycle. That obviously wouldn't have worked for this set of arrangements, and nor would the usual 30-day payment terms that we have under the existing arrangements. In the interests of, again, trying to ensure liquidity, which is the purpose of the MSC policy fundamentally, we've adopted a 5 working day payment term. That's consistent with other invoicing in the industry, such as the BSC, and there's certain energy invoices in gas, etc. That's a 5-day payment term, and the DCC as well. So hopefully that's not without precedent, and you can appreciate why we've expedited that. In terms of the funds allocation, we'll come on to the timeline shortly, but basically the process from beginning to end should take approximately 30 working days, and that's from the close of the MSC period through to receiving funds. In order to ensure that, we've also had to look again at the late payment process, and again there'll be an expedited escalation route for that. Essentially, the day after payments were due, if something hasn't been paid, we'll be issuing a notice both to the party who is late in payment and to the Performance Assurance Board under the PAB. And then there'll be a period of 20 further working day period after that in order for the late payer to essentially settle their invoices. If not, the PAB will be expected to then issue a performance assurance technique, which in this case is one that's already set out in the REC in such an event of default, which will be that we can issue a notice to the central switching service to suspend registrations. And we think that's appropriate because essentially This is all about ensuring that there is compensation flowing through to the suppliers who are losing sites, in the case of large amounts of churn in the market. And essentially we want to be able to place a suspension on that and ensure that any parties that are not paying that required compensation are not able to continue gaining supply points and not paying the expected compensation to losing suppliers. So again, it's a very expedited process, but it's using existing performance assurance techniques and remedies that are available in the REC. Again, with the disputes process, that's trying to use existing processes as far as possible. We're not reinventing the wheel, and again, that's in the interests of having a relatively quick and easy to implement model for all of this. So again, disputes go to the Performance Assurance Board. The process for that is set out in the Performance Assurance Board procedures, and they're available on the REC portal if anyone wants to go into them. We will be setting out some grounds for an appeal, a dispute to be heard by the PAB. We've insisted on there being a pay now dispute later process. Again, this is not without precedent. You'd see those kind of things in the UNC, etc., for energy balancing charges, and this is to ensure again that there's liquidity and we've got cash flow going through to the suppliers that are essentially losing those supply points and essentially need to compensate them for having to unwind their hedge position in line with the MSC policy. So again, hopefully that makes sense and is again consistent with what you're used to elsewhere in the industry. In the interests of efficiency and to make sure that we're not clogging up the Performance Assurance Board with lots of small invoices, we've introduced a de minimis threshold. Again, we've looked for precedent elsewhere in the industry. We've set that de minimis threshold at £3,000 or the value of the invoice if it's smaller. And again, we've taken that principle from the BSC in that case in terms of their trading disputes thresholds. And we would expect disputes to be on an aggregated basis, i.e. there is something fundamentally wrong with your invoice and the total of it, not querying individual supply points that have transferred and whether or not something was domestic or non-domestic, etc. We'll go into how those are filtered out later, but we wouldn't be expecting to drilling down into individual cases as a dispute. If we can move on from there, please. So this sets out the process as a whole. This is also laid out in the high-level description of the scheme as set out on the REC portal. Again, this shows the timelines of this from beginning to end, i.e. payments been made 30 working days after the closeout of the MSC period. We think that's consistent with Ofgem's intent in terms of trying to have a very fluid compensation scheme. We'll be capturing the data within 5 working days of the closeout of each MSC period. So as I say, we'll be capturing that from Electrolink, CNC and XSO. They'll be providing the reports into our appointed service provider. That procurement is still ongoing, so we won't be naming who that is yet. They'll then calculate the charges using the MSC charge setting against the volumes, etc., and the number of switches. They'll feed that data then into RECCO within 15 working days of the close of the MSC period. We'll then issue those invoices on that 15th day. Payments will be due 5 days later, and then again 10 days after that, we'll expect to pay out to the suppliers who've lost supply points and are therefore due a credit under the scheme. Happy to go into any of that again later. The disputes process is set out at the top. That's not essentially when this is when the disputes will be settled as such. That's the window in which a dispute would be allowed. So again, we'll be having a pay now, dispute later principle. The PAB will not hear a dispute if the invoice has not been paid on time. So that window of opportunity would kick in the day after essentially your payment due date, and then you've got a further 10 days in which to raise the dispute. I'll go into the process on that in a moment. I think that's all I was going to say on the timetable. Again, I'll address any questions on that if any are raised. terms of the existing industry data sets, it's a relatively straightforward scheme in terms of the data that we need to capture. Essentially 3 variables, and all of this data determines what those are. So it's the number of switches, the volume associated with those switches, and a charge to be applied to them. So we'll be capturing both MPX data for domestic suppliers, essentially. So we're looking for domestic supply points that are registered domestic suppliers. So essentially there's a double filter there. If there are any supply points that are erroneously registered to a non-domestic supply, for instance, they wouldn't be part of this scheme. Non-domestic suppliers have no obligation under license to pay into and are not entitled to receive anything from this scheme. We'll be capturing that in terms of the shipper shortcodes, supplier shortcodes in gas, obviously, and the market participant IDs in electricity. It's important, as I say, that we associate a switch with each individual day, so that we know the applicable MSC charge. In some cases, that will go from being 0 to a material charge. So again, it's important that it's particular to a given day. And in terms of the volumes, as you'd expect, it's the annual quantity in gas and the estimated annual consumption in electricity. That'll all be charged back to the relevant suppliers on a pounds per MPR, pounds per megawatt hour basis, essentially, or kilowatt hour, however it may be set out. I think that's essentially it. Again, the effective from and effective to dates are as set out in Ofgem's dashboard. So it's the date at which a particular MSC charge comes into effect, and then the date it applies to. So we'll be matching the switches to the days and then to the charges that were applicable on that day. That's it. I'm happy to answer any questions on that section before handing you on.
Thank you. We have 5 questions, so asking questions in order of popularity. We have the first question. Why won't data be available at MPXN level? Without MPXN information, suppliers will not be able to validate the invoices they are receiving and raise disputes.
I think that's essentially due to the size and complexity that would evolve in terms of the scheme. We'd be issuing invoices that potentially run into hundreds of thousands of lines if we were to do it at an MPX level. So it'll be aggregated up. That should match any data that you'll be seeing at MPX level at your end. So if you know that 100,000 sites have gone through, you know exactly which 100,000 MPXs they relate to. But it'd just be far too complicated for us to issue an invoice that went into that level of granularity. Again, we've had to set this scheme up very, very quickly and keep it as simple as possible in order to achieve that early start date.
Thank you. The next question is there scope to change payment to 10 working days, or are you assuming all invoices are paid by CHAPS?
I think Brian will cover the question on the CHAPS. Again, the 5 working days taken from existing industry precedent, so I would not expect any supplier to have any problems being able to settle an invoice within 5 working days.
Suppliers have an additional 20 working days to pay before any real action is taken. Could suppliers use the full 25 days and slow down payments to other suppliers?
No, well, the way the scheme is working, and I probably should have covered this up on one of the earlier slides, is that an individual supplier not paying doesn't mean that another individual supplier doesn't receive those payments in full. Essentially, they're paying into the scheme, and the scheme pays out to the losing suppliers. So if we receive 90% of payments in, we'll pay that 90% out. So everybody will receive a pro rata payment in terms of what they're due. So that will hopefully ensure liquidity even if someone is late in paying. We would take a dim view of people who were taking, the 25 days habitually. It is an escalation. You are in default if you haven't paid your invoice by the 5th working day, and it has already been escalated to the PAB as soon as that notice is issued. So people really shouldn't be seeing that as an extended payment timeline. We're really looking for those payments to come in as quickly as possible and be resolved ahead of that 20th day. As I say, it's quite a serious issue if you've not resolve that event of default by that 20th day, and we will be issuing notices to the CSS to suspend registration. So again, I think if that was to happen more than once, there'd be serious questions asked of it.
Thank you. Next question. Which EAC AQ will be used in calculations? These are recalculated periodically and can fluctuate. Which one is used could have material impact. Which one is used could materially impact the value of MSC?
Yeah, it would be the prevailing EAC or AQ value on the day that the switch is effective. So we appreciate that sometimes a gaining supplier would seek to change those EACs and AQs through an opening read or a supplier agreed read process almost as soon as they've inherited the site. But the key thing here is that you're compensating the losing supplier for the amount of energy that they've purchased on a forward basis. So it's not really what the relevant volume is not what the incoming supplier assumes will be the consumption will be going forward. It's really what the outgoing supplier has already hedged for. That's the theory of the scheme. So it is the prevailing AQs at that point in time that will be and EACs that we'll be using for the purpose of the charges. If we did it the other way, then we wouldn't be able to issue the invoices until the incoming suppliers have gone through wherever process they need to be satisfied with the AQs and EACs, etc., and it'd drag out the whole thing, and they wouldn't match. Essentially, the payment that an incoming supplier was expecting to pay wouldn't match the payment that an outgoing supplier was expecting to receive. They'd be out of balance. So it's important that we take them as a snapshot in time, and as I say, it would be the point of time that the switch is effective.
We've had 3 more questions come through, and we do have some time, so just going to see if we can get through those 3 questions now. Is it appropriate to apportion credit equally in the event of underpayment? It would be better to apportion funds on the basis of who needs them to avoid exit.
We wouldn't have access to that information. We don't know who's in financial distress at any given point in time. As you'd expect, that's commercially sensitive information, and I don't think it's right for Retco to try and determine which of 2 suppliers is more deserving of a payment. So we've done this on the basis of everybody receiving an equitable payment in the event that we haven't got 100% of monies in by the due date. We'll do it on a purely equitable pro rata basis. So there's no subjective assessment of which supplier is more deserving, etc. And that's essentially why we've also done it on the basis of the scheme owing them money as opposed to an individual supplier. You could get a situation where supplier A gained all of their supply points from supplier B, and if supplier A didn't pay, then supplier B is out of pocket, whereas everybody else is receiving payments. It's, you know, this is the most equitable way of doing it, we believe.
Queries must be raised before payment date, 5 working days. 7.3, disputes must be raised within 10 working days after payment due. Is there a distinction between query and dispute?
Yes. So a query is essentially something that while the invoice is live and could be resolved between the payer and Retco. So, you know, if we've made a mistake on the invoice, that's something that we can look at and hopefully resolve immediately, and then we can rework the calculation, so it wouldn't need to be escalated as a dispute. The dispute process is essentially if we've not received a query or we've received a query and not been able to resolve it to either our satisfaction, the monies should still come in order that we can keep the scheme liquid, but then we go back to the data and try and resolve that issue. So again, it's a slightly separate process in that if it's in dispute, Retco is convinced that we've issued the right amount of money, and someone doesn't believe that they've received the right level of charge. The query is essentially a preliminary process and hoping to avoid that dispute being necessary.
And the last question for this section, Retco has no timescales to resolve queries or disputes. What happens to suppliers' payments while a supplier's charge is being disputed?
Well, we do have timelines, as we've just been through, so the queries will have to be raised and resolved prior to the invoice due date. A dispute cannot be raised unless the invoice has been paid. That's the precondition. So that timeline is already laid out. So queries have a very finite end date. Similarly, disputes, the existing PAB procedures set out that any dispute that is referred to them would be expected to be determined by the PAB at its next following meeting. There is also a provision in there that if the issue is sufficiently urgent, it could be done outside of the normal meeting cycle. We are open to looking at those PAB procedures to see whether or not we should introduce some kind of threshold to determine what urgent means in this context, because the disputes procedure as it stands applies to the code as a whole and any type of dispute. So in this particular instance, it may be that if we feel there is a dispute over a material amount of money that cannot await until the next scheduled PAB meeting, we could potentially do that as an extraordinary meeting. So really, you shouldn't be looking for anything further than the time period between the payment due date and the next scheduled PAB in terms of the timeline for it to be resolved. Obviously, that's assuming that we've got sufficient access to the data to resolve that query, but given that there's relatively few variables in this, there's relatively little that can go wrong, it should be resolvable in that amount of time.
Thank you. They're all the questions that we have for that section. So we're going to move on to talk about invoices and credit notes, and I'm going to hand it over to Brian.
Good afternoon, everyone. I'm in a room by myself, so excuse any echo that you can hear in the background. I think there was a couple of questions I just wanted to pick up from earlier answers. There was a question around the payment timescales, paying for 10 working days and payment by CHAPS. The intent was that funds would be electronically transferred by bank transfer, be that CHAPS or sort of standard payment. As regards the timescales for payment, if the payment timescales were extended to 10 working days, then it would push each of the subsequent periods back by an additional 5 days. So instead of the cash being allocated that's been received for any particular billing period within 30 working days at the end of that period, it would essentially push it back to the within 35 working days. The 5 working days was chosen to, as John said, to ensure that payments, that money is received as soon as possible, to get the liquidity into the market, and then that money is processed around and paid out as soon as possible thereafter. So that was the basis for it. But if it was pushed back to 10 working days and there was an overwhelming response from industry to the change that it should be 10 working days, then that would be the consequential impact, is that money would be paid out later. There was also a question, I think, around EACs and AQs, and around which are the ones that are used. And I just wanted to highlight one particular peculiarity with that in the event that an EAC, and I think it is purely EACs, I'm not an expert on EACs and AQs, but in the event of an EAC being unavailable from industry data, there is a default EAC which Ofgem will provide to us, and that's what will be used where there is a no available EAC for a particular IMPAN. And again, please, if one of my colleagues who are better acquainted with that has more information, then they can fill that in at the end of this session. This section talks really around the calculations of the charges, the production of the invoices, the production of the credit notes, and also the production of how the cash is then sent out to people once it's been received. The scheme itself essentially uses three systems. It uses existing industry data sets. It uses the model that RECO is getting built to calculate all the charges, and then it uses RECO's finance system. So it uses three systems, and those three systems and what we've done is we've designed a scheme which allows for the transfer of data between those three systems over secure file transfer, and it's integrated with the minimum amount, if none at all, of manual intervention. We wanted a fully automated scheme. The model itself that will calculate the charges, it'll have some standing data within it. It'll have the MSC charges calendar, so the week by week basis, and then that will translate into 4-week billing periods. there was an original intent, or there was an original idea that we would do it on monthly billing, but then that would end up with part weeks. We would have occasional weeks where it would fall into June, or part of it might fall into June, part into July. So we moved to actually having 4 week billing periods, and there will be a calendar built in that'll say these are the MSC weeks and these are the associated 4 week billing periods. The first billing period will be essentially a catch-up, assuming that there are charges for that period, will be a catch-up from the period from the 14th of April to whatever date closest at the end of June or July, which covers, I think it's a 7 or 8 week period. The final billing period from memory will have a 1 week period in it, which could be the last week of March 2023, if the scheme runs to March 2023, or essentially the last week of September, or a number of last weeks in September if it runs to the end of September. Also, the standing data that will be included within the model is the master supplier list, because this has all been done at either input level or short SS code, short code for gas. And we have a matching model which matches the short codes and the inputs to the particular supplier. Because we will bill suppliers, we won't bill on individual inputs or short codes. The data that'll be used for the calculation is really it's 2 items. It's the number of impans, but the volume associated, MPRNs. It's the number of MPRNs and the volume associated with them multiplied by the MSC charge that we would get from Ofgem. The invoice that will be sent out, so if you are in a week where there is an MSC charge and an MSC charge is greater than 0, and there have been change of supply events in that week, then there would be an invoice raised for that period. As a supplier, you will receive an invoice if you have net gains over that 4 week period. Therefore the gains that you have is greater than the losses that you have for the same period. If you are, I was going to say a net loser, if you have net losses in that period of time as a supplier, then you will receive a credit note. So essentially, is the invoice is the money that you owe to the scheme. The credit note is the money that's owed to you from the scheme. As I said, we'll run it on a 4 weekly invoicing cycle. It'll be invoiced on the basis of net gains or losses. Invoice if you have net gains, credit notes if you have losses. In any billing period, the gains should equal the losses. So RECO will issue invoices to the same value as it will issue credit notes. I'm happy if there's any questions at that point, and that's the kind of the first part of the screen of the scheme from the financial aspect is the production of the production of the invoices and the credit notes. If not, if I can go on to the next section.
There are no questions at this point.
Excellent. So the next section deals with what happens when somebody receives an invoice and what happens when they make a payment of that invoice to RECO. So the gaining supplier will receive their invoice. The invoice will be quite detailed. What it will identify on the face of the invoice, it'll identify for each week within the period. So it'll go week 1, week 2, week 3, week 4. It'll show the losing, and sorry, I'm just going to use input in this example. So it'll show for the input for gains, what the gaining input was, what the losing input was, the volume of number of impans for in that week, and the associated volume multiplied by the applicable MSC charge, and then that'll give the MSC charge for that particular switches between those two inputs. For each week, it'll break it down to that level. If we broke it down to a further level, if we broke it down to an impan level and it listed each particular impan, then it would run to hundreds and hundreds and hundreds of pages. So the invoices themselves will have a significant amount of information on them. What it'll also show is any losses, although those numbers will effectively be negatives. And then the invoice at the bottom will have, if it's an invoice, it'll have a positive number. If it's a credit note, it'll have a negative number where the losses are greater than things. We have confirmed with Her Majesty's Revenue and Customs that the MSC charge is, and I'm going to use very particular VAT language now, it is outside the scope of VAT. Consequently, there will be no VAT on those invoices that you receive. So the charge will be the volume multiplied by the MSC without VAT on it. When the payments are made, excuse me, when the payments are made, the intent is that RECO remains cash neutral in this respect. So money paid into the scheme will be equivalent to the money paid out of the scheme. It will be allocated on the basis of pro rata, as John explained earlier. Excuse me. It will be allocated pro rata applicable to each billing period. So for example, if for billing period 5, RECO gets in 70% of the monies owed for that, those people who are owed monies for billing period 5 will receive 70% of what their entitlement is. RECO doesn't get to keep the remaining 30% if it is then paid late. As that money comes in, that will be allocated in each subsequent billing period. Every time we run a billing period, we will carry out those calculations, and money will be paid out on that particular cycle. RECO, we will remit the money to the losing supplier's nominated bank account. What we will need from suppliers is, because at the moment, RECO doesn't make payments to any suppliers. What we do is we invoice suppliers for our costs and they pay us. So we will need to do a data collection exercise with all the suppliers where they will need to nominate and provide us with the information as to what account they would like that money paid to in the event that they are entitled to a payment under this scheme. What we will also request from suppliers is what any billing information that the billing information that RECO would require to raise the invoices. Currently, we have billing information for the RECO charges, but it may be that suppliers say, no, we want you to bill a different department, we want to send to a different email address, or so on and so forth. So we will be requesting that information over the coming weeks as well. One of the things that we've done, and that has been built into the scheme to ensure we've removed the concept of netting off. So for example, if a losing supplier has an overdue invoice from a prior period, but then is entitled to a payment from the scheme for a subsequent period, they must pay that overdue invoice prior to any money's been paid out. That allows periods to be matched evenly. What it also does, and I think it builds on the comment earlier about, in effect, are we giving people 25 days credit terms? What it stops is suppliers from holding back paying into the scheme on the assumption that at some point in the future they are likely to lose customers, and they will wait till they have net losses for it, and they'll just offset the credit note against the invoice at that point in time. That's all I was going to say about this. I'm very happy to take any questions.
No questions just yet.
Okay, thank you.
So now we're going to pass back over to John, who will walk us through the disputes process.
Thanks, Brian. I think we've largely covered most of this already, to be honest, in response to that earlier question, but just to reiterate, so there is a difference between queries and disputes. We'd expect any queries to be raised to RECO directly, and we'll try and resolve any that we recognise as being, a manifest error in the invoice, etc., without it needing to be raised as a dispute. So that happens before the payment due date. So I think that's in keeping with any other payment terms you'd expect to see. It's only reasonable. We would expect the payments to be settled on the due date. Again, this scheme is all about ensuring cash flow, so it's very important that everyone pays on a timely basis. And as I say, all the subsequent escalations, etc., are already baked into the rules. There's no one having to come in and decide whether or not to escalate. It will be escalated the day after the payment due date if we haven't received that payment. However, you do then have the further 10 working days to raise a dispute, assuming you've paid. So, if you got an invoice for £20,000 and you thought it should have only been 10, then by all means raise a dispute. PAB will then look at that, look at the underlying data and see whether or not a mistake has been made somewhere along the line. As I said earlier, we would expect those disputes to be resolved by the next scheduled PAB, subject to them having sufficient time in advance to consider the information, etc. If there's a material amount of money there and you feel you can't wait until the next scheduled PAB, then as part of your dispute, you could ask for that to be looked at urgently, and we would obviously consider that. In terms of the process, it's exactly the same as a normal disputes process currently. We're not proposing to do anything different. So you can find the forms on which to raise a dispute on the REC portal. You'd submit those via the service desk in the usual way. And then say we'll resolve those as soon as possible. We have set out these conditions, as say the pay now dispute later principle being the key one. The fact that we've got this materiality threshold there to avoid, being swamped by potentially insignificant amounts of money and then dragging out the process before we can resolve the ones that might be important. And we would also expect there to be some underlying evidence provided to support the dispute and to help us resolve that issue. So if I can take a typical example, if you've received an invoice that says you gained 10,000 supplies in MSC week 3, and the charge was applicable, whereas you think you actually gained them in week 2 when there was a nil charge or a lower charge, then that's something we could look back at and we trace back the effective switch dates, etc. So those are the type of things that might be expected as a dispute going forward. But and say we're taking prime facie data from Exaserve, from Electrolink, and from CNC. So hopefully, the fact that we're all using those same central systems, we're not duplicating the data sources at all. They should all be matched together. And I think in terms of the initial queries, as Brian said earlier, everything should be matched. It's essentially like double bookkeeping. So an error should be easy to spot in the sense that someone being undercharged on one hand results in someone being overcharged on the other, etc. So there should be correlating data that will help us spot those anomalies. I think that's all I was going to say on the disputes process, and then if anyone's got any further questions on it.
We do have one question. Will reversals of erroneous transfers be charged at the original cost or the cost at the time of the switchback?
That's a very good question. We do have a rule for that, I believe, but I can't remember off the top of my head how it works. I think they just treat it as two entirely separate switches. So yeah, I don't believe they'll be treated as separate. They'll just be treated as two entirely separate switches. Yeah, that's how we're dealing with it.
Yeah,
Brian,
I think that's the basis, because the data extracts wouldn't. From memory, I don't think the data extracts that would come out of the industry systems would be able to identify that that was an erroneous transfer, and therefore it would be just a transfer in that particular period subsequently.
Yeah.
Okay, thank you. So they are all the questions we have for that section. We're going to move on to next steps. I'm going to hand over to Anne.
Thanks, Fiona. So I suppose it's just worth recapping then what the expectations are on suppliers, which kind of John and Brian have covered off. So just to confirm, that is to provide the contact details for kind of operational and financial contacts for use within the scheme. There'll be a request to confirm and provide bank details to be used for the MSC payments. And obviously when the invoices are produced and sent out, it obviously pay when they're due. So what we are expecting is over the coming weeks, as part of our readiness and release activity, the code manager will reach out to request and obtain the relevant contact details in advance of 30th of June for the implementation date. If we can just move on. So from a change proposal perspective then, so the plan that's on the screen, so this is the timeline for the change proposal R35. So we are currently within the impact assessment period. As we mentioned earlier, that is closing on the 29th of April, and that is end of the day on the 29th. So what we are looking for is obviously for responses to the impact assessment, and the impact assessment is really looking to validate and to quantify impacts that the proposed solution has. It is also an opportunity to ask any further questions or to provide any views on the legal text that's been set out or the solution, but the main thing is to ensure that we have understood and confirmed the impacts on suppliers and other parties as well. So once the impact assessment closes, what we'll do then is we will, any comments, responses that we get back, we'll then review those and potentially refine a solution if we need to, look at what the comments are, what the legal text is. Ultimately, that will then be set out in a preliminary change report where we will set out the case for change. We'll confirm any changes that we have made to the solution, to the process, to the legal text. In that report, we'll also confirm what the changes are, what's been made and why. And we'll also respond to the comments that have been received from the impact assessment. That report will then go to the responsible committee, which in this case is the change panel. The responsible committee will review the report to make sure that the solution is fully set out, that we have responded to any queries that have been raised through the impact assessment period. And then that will go out for consultation. So the consultation period that we're looking at there is actually from the 13th of May through to the 1st of June. So that's a 13 working day consultation period. With it being an urgent change proposal, it is slightly shorter than the standard. However, it is longer than would normally be seen for an urgent change proposal. During that window, we would also be looking to hold a further industry session. And again, it's that chance to ask the questions, talk through any changes that have been made, and just make sure that people have the right information to be able to respond to the consultation. And the consultation we're looking for at that point, it is views and opinions on the proposed solution, how we've set out that case for change. There will be the code manager's recommendation within there, so it is the opportunity to assess and respond and provide views on that as well. The consultation responses, they will be reviewed. Again, it is that opportunity for us to, as a code manager and Reco, to assess the solution based on the comments that we receive from the consultation. Look to understand if there's anything in the material that needs to be addressed, and that would then, any changes will be set out within the final change report, which will go to the change panel, who would then look to make a recommendation to the authority, to Ofgem, for them to then make a determination by the 24th of June ahead of implementation of the change proposal, legal text and the processes from the 30th of June. So if we can just move on. I think finally, for those people who aren't necessarily familiar with how to access or respond to the impact assessments, so it's done through the REC portal, access through onto the change and release page. There is the impact assessment register within there, and you will find the impact assessment for R35 there. And if we can just go on to the next slide. So this is how the impact assessment page looks like. Within the accompanying document section, you'll see there is a impact assessment request. So the background, what the questions are, it has the links to the information. It has an impact assessment response form. So those are the specific questions that we're looking to get answered. And it also has the legal text that's been proposed and the high level solution overview. So to respond to the consultation, download and review the documents, download the response form, complete that with the information, and then within the impact assessment screen, click add response, and through the upload process there, you would upload it back and we will be able to have access to view and look through the responses there. As I say, it's open until end of the day on the 29th of April, and we hope that everyone now has enough information to go away, to look through the solution, to then be able to respond by the deadline that we're looking for.
Thank you, Anne. We have 3 questions for this section. They seem to all relate to supplier of last resort and the charges. So it may be more appropriate for John and or Brian to answer those questions. The first question we have I believe the supply of last resort switches will be included. Would MSC payments be paid to the failed supplier or their administrators, or to the new solar supplier?
John, do you want to cover that one off?
So I think the answer is, yeah, I think the answer is essentially that if the transfer of the supply points is happening between two MPIDs that are now under the control of a given supplier, as would be the case in a solar event, then essentially they'd be filtered out. So although they'd be showing up in the data as, you know, potentially a move from MPID A to MPID B, if they're both controlled by the same group, then they'd be filtered out and they wouldn't be part of the invoice. We wouldn't be paying at either the administrator or the failed supplier at that point, because the MPIDs would have been moved across to the new supplier that's been appointed by Ofgem. That's one of the things that we'll be tightening up going forward, making sure that that process is much quicker, and that we're recognising those solar events within central systems much more quickly. So I don't believe either of those kind of scenarios painted out originally would happen. The incoming solar supplier would essentially be moving the supply points between two MPIDs which are now under their control.
Thank you. Next question. New faster switching cancellation price allows customer to return to old supplier on previous terms. Will look like a new gain, but isn't. This hasn't been covered.
I think we've probably
again, but isn't. Has this been covered? Sorry, I asked the question incorrectly then.
Oh, I think it's essentially the same as the question we had earlier about erroneous transfers. So yes, a supplier would initially be receiving an MSC payment when they lost the supply point, and then they'd be having to pay it back to the other supplier when the customer transferred back. They'd be recognised as being two separate switches within the systems. So you would have to make each of those payments, and it may fall in different MSC weeks. So yes, there is a possibility that the payment you receive in 1 week will differ to the liability that you're then owing into the scheme the following week when the ET is resolved. I don't think there's anything we can do to resolve that, because we're dependent on the switching data that doesn't differentiate between an ET and a normal switch.
Okay, thank you. Next question. Can solar switches and switches between MPIDs owned by the same organisation be excluded from the calculations?
They'll be captured in the data that we receive from Exaserve, etc. We'll filter them out at the invoicing stage. So Brian and his team wouldn't issue an invoice to a supplier group that has two different trading names and moving things between each portfolio. So they'd be filtered out at that stage. Yeah. So they'd be captured in the original data, but filtered out from the billing, if you like.
And I think you may have already answered this question, but I'll ask it anyway. Will a charge on solar be excluded?
Yeah, I think we've covered that. If it was that scenario that we were talking about earlier on, again, it'd be captured in the data, but the appointed solar supplier wouldn't be receiving an invoice for supply points. That's just moving that it's now in control of on both sides of that transaction.
Thank you. And the last question we have at the moment. Oh, no, we've just had another one come in. What data will be used to show solar is the same supplier? Is it MDD?
It will be MDD insofar as, yeah, it'll be the supply codes of the MPIDs. Yes. Yeah. So if that's what you meant by that, yeah. As I say, we'll as soon as Ofgem has announced that a supplier of last resort has been appointed, we'll know that, and we'll make sure that we've captured that at least at the invoicing stage. So as I say, the data will come through showing that essentially a switch may have happened between two MPIDs, but we'll know that they're both then controlled by the same group, so they'd be filtered out at the invoicing stage. Yeah.
Thank you. And I believe this may be a question for Anne. Should the cost for build, design and implementation be included in the change proposal? If so, where would we find this?
So I'm assuming you're talking about from a kind of a Reco kind of administration perspective of that system.
Yeah, I think maybe we can cover that one. Anne, sorry, Brian, were you going to cover it? Yeah.
Yeah. So the costs associated with we're currently going through a procurement for the 3 data sources, and unfortunately there is no competition in the data sources because the data sources are unique to the 3 different organizations. We've had the cost back in for those particular costs, and they are not substantial. I can't disclose individual company thing because that is commercially sensitive information. But certainly, I was very pleasantly surprised by the quantum of the costs that we've had back in from the 3 service providers. We ran a competitive procurement for the build of the model, and actually as an hour after the conclusion of this call, I'm going to have a moderation session on the scoring of those bids that we have received. Because I done, along with a couple of my colleagues, we done evaluated the quality response element of those bids. Unfortunately, I'm blind to what the commercial aspect is, but by Monday morning we will know that. And again, unfortunately, we won't be able to share the detail of it because that will be commercially confidential information. However, I would say that in the RECO budget for 22-23, and assuming that this service does end at the end of March 2023, and is not extended by Ofgem, and however Ofgem may choose to extend it beyond that date, we did include within the budget an allowance for the MSC project for this year. So within that budget, the cost of all the administration and operation of this scheme and all third-party costs would be covered through that budget allowance. And I'm desperately trying to avoid how much to tell you what it was because I can't remember. I think it was I think we put in 500,000 to cover the project for the year.
We did, yeah.
Thank you. So there are all the questions we have at the moment. Does anybody have any questions that they would like to ask the Reco and the code manager verbally? There are no hands going up. Oh. No, okay. In that case, that is the end of our MSC walkthrough today. So just say thank you all for attending. And oh, we've got a hand gone up. Laurie, would you like to ask your question?
Yeah, sorry, I was just trying to find the hand up button. Should hopefully be an easy one. Will the charges on the invoices be broken down by SSE and MPID? So we've got multiple IDs. So
yeah. Brian will correct me if I'm wrong, but that's what we're intending to do. Yeah, that's part of the template invoice we've set out. Yeah.
Okay, excellent.
Thank you. And I believe we have one more hand that has gone up. Oh, and it's gone back down again. Okay. So in that case, yes, thank you all very much for attending. On your screen now, you'll see a QR code for a feedback survey. It's a very short survey, just asking you for feedback on today's session. This really helps us to understand what it is that you need to know from us, want to know from us, and how we should communicate with you to ensure that as we engage with you in the future, we're doing so in the right way for you. So I'd really like for you to use either the QR code or the slido.com from your desktop. Alternatively, it is on your Slido app if you're using the Teams app. So please do give us some feedback to ensure that we are continuously improving how we engage with you in the future. But on behalf of myself and my colleagues, I want to say thank you all very much for coming. The video will be on the REC portal and REC website in shortly, along with the FAQs.